Welcome back, everybody. Thank you for sticking to the time and showing up. I'm very excited for our next speaker, Dr. Victor, and Dr. I'm so sorry if I'm going to butcher your surname, Ediagbonya. Just going to say it really fast. Thank you. He said it's okay. So he's a law lecturer at the University of Brighton, UK, specializing in comparative corporate governance and financial regulation. This man knows his stuff. He has extensive publications and numerous accolades. And today, his topic is sustainable finance solutions, the impact of financial technology on financial inclusion and sustainability in developing and emerging economies. Let's give a warm welcome to Dr. Victor.
Thank you. Thank you very much. Okay. Right. Okay. Good afternoon, everybody, and thank you for that introduction, which kind of got my head spinning in terms of my vast publication and things like that. Yes, it's a good time to speak. Probably I haven't had your lunch, but at times, as academia, we can be boring. So hopefully you guys don't fall asleep by what I'm going to say. But this is very important, given this magnitude of people attending the conference, and also the fact that I'm not particularly sure, but I'm of the view that not many academics have attended this conference of this nature before. What prompted me to attend the conference is I've been doing a lot of work, okay, on financial inclusion, okay? So I've looked at various fintech firms and startups and services they are providing. I'm not going to bore you with conceptual and theoretical framework of financial inclusion. You can read that in my publication, which obviously have garnered a lot of citation in less than 1 year that the paper has been written. So once you put this title there, you have access to the publication. So the publication is there. So I've done this research from a doctrinal perspective. Having done that, that's what led to the first publication. So we've moved, we were able to secure grant in order to take it to the field. And we've gone to the field, and I'm going to share some of my findings with you today. So this is just the basic agenda that we're going to follow. So we look at the research problem, and then there's a question I ought to answer, attaining sustainable development, driving fintech for micro, small, and medium enterprises, and probably if there's time, we'll take questions, but if we don't have those, then you can email me your question, or we'll have a discussion after these sections. This is just a brief of my profile in terms of what I'm doing. Yes, but when you look at the theoretical or the background to the problem, I have niched this looking at it from developing economies, but I've also looked at the importance of micro and small business enterprise. Well, I know that most people that are here, you're about what we do, what finance, what the fintech companies can, services that they can provide. Yes, those are good things in terms of being able to enable transactions, between people and between customers, okay? That is that is laudable in that sense. But however, we have an issue when it comes to micro and small business enterprise in terms of African context, okay? We know that over 90% of these small businesses drive the economy of Africa. Okay, and we have more than 44 million MSSE in Africa, and they face a number of challenges in terms of being able to secure finance. Okay, that is the core challenges that they are facing. So the question I intend to answer from this presentation is whether there is a link there's a linkage between MSMEs being able to obtain finance and barrier to driving poverty in sub-Saharan Africa. So the second question, what can fintech do to leverage this in order for these small micro businesses to be able to secure funds? And the tenth question I will seek to answer is that apart from a fintech startup, what about other agencies and stakeholders like governments, telecommunications, traditional banks? So in what area can they come in to help those who are in the remote parts of Africa? Because there's this digital divide. We talked about, we are able to do transactions. So we've got mobile money in Kenya, we've got OPay in Nigeria, but being able to do transactions is more than being financially included. So most of these arguments I've made in my publication. So I'm actually talking, when you look at the picture on the slide, I'm actually talking about this group of traders. Okay, I know fintech products and services are targeted towards a certain group of people, but how well do our product or services impact on including these people financially? Okay, so they are the petty traders that are trading in the remotest part of Africa. So are we able to say that they are able to use mobile phones or mobile technology to do their transaction? This kind of business they are doing, how much do you think the business is worth? What would have made a difference if they can have access to finance? Would they have been able to grow their business? So these are the core issues that we are looking at in order to tie financial inclusion with sustainable development. Okay? Sustainable development is based on the theory that we need to reduce inequality, okay, and terminate exclusion, and make sure that by 2030, no one is poor. But people in Africa are poor, okay, in terms of the majority of the people who are living below poverty level, extreme poverty, that is on $2 something per day. We have over 700 million of people worldwide, okay, that are living below $2.19 per day. And the majority of these 700 million, more than 50, probably 56% are living in sub-Saharan Africa. So how do we get them out of poverty? Okay, how do we get them out of poverty? So that's what we have been able to do. We've gone to places. I've used, our work was based using Nigeria as the first place. We're going to go to Kenya, Ghana, Gambia, South Africa, and Cameroon to look at the indices there. But what we have found that in this remote part of Africa is that transactions are done in cash. Okay, transactions are done in cash rather than doing their transaction using this platform. And there are a number of reasons for those challenges why they will prefer to do transaction in cash and the problem associated with that. So our work is focusing on specifically, it's tied to about 7 SDG of the 17 SDG, but we're looking at 4 core SDGs. So no poverty, gender equality, decent and economic growth, and also looking at industry innovation and infrastructure. So that's where our work is focusing on. So from our research, we were able to find that there are several reasons why people don't want to even have a bank account. Okay, so we've talked about the unbanked in the research. So unbanks are people who don't have the traditional banking accounts. Okay, if you look at the percentage of Africans that even have African adults that have bank accounts and mobile money wallets, they are about 49% overall. Okay, and the argument I've made in the paper is it's not sufficient for you to have a bank account or have a mobile money wallet that makes you financially included. It goes beyond that, looking at what is happening in other parts of the world, okay? So because some people having those traditional bank accounts are not even happy to use them, okay? Because of the charges that are affiliated with using those accounts. Okay, so if they are using the account, the money is coming out of the account, and they are paid for every transaction that comes in or goes out. So, so we look at one of the major reasons people in Africa do not have account. There are a number of them. So we have like 8 of them. Someone will tell you, I don't need to have a bank account because I don't even have the money to put there, okay, among the petty traders. So they can tell you there's no need for an account. The cost of running an account is too much. Where the financial institutions are located is too far. The documentation required are too much. There's a distrust in the financial system as well. I'd rather keep my money at home because this bank can go bust at any time. So these are a lack of education, because a lot of people having bank accounts may need them to do some kind of paperwork and writing stuff. So I've actually seen people in the banks in Nigeria when I went for observation, actually meeting others to help them fill out the paperwork, and that also have issues with data protection and privacy, as the case may be. Right, so there are key challenges for micro and small medium enterprises to access finance. So the collateral requirements can be enormous, so they might need to deposit their landed property as collateral. Some of them may not have it. So if they eventually put, let's say, their deed of assignment or something there, they borrow some money because of the interest rate, they might not be able to pay back, and as such, they forfeit that collateral they have put down. So that's one issue. Another issue is lack of awareness. So there's no education tailored to these people for them to know that at times they might have opportunity to be able to secure a loan. Okay, to secure loan, that peer-to-peer lending or through government initiative that can work for them. Just like a place in India, they have, like using India as a case study, they have the micro, small, and medium enterprises ministry, okay, that actually looked after the small businesses. And they also give loans in order for them to be able to promote financial inclusion. So another problem with militating against them having access to secure funding is interest rate, okay? The disparity of interest rates. Let's say, for example, even if the financial institution have looked at the documentation and I'm happy to progress and give them loan, they might ask for, this loan might be awarded at a very outrageous interest rate. Let's say, for example, they can say, oh, we are giving this loan on 30% APR, rather than compared to, let's say, a multinational company securing a loan for less than 2 or 3 or 4% APR. So the problem of getting these loans and paying back become a very challenging issue in that regard. So another issue is I talked about that before, is the complexity involved in documentation. Some people have never had passports, okay, in their lifetime. So if you want to give loan, you start asking them for, can you get your passport? When you have NIN, or you are telling them, go and bring tax clearance for 5 years, okay, that you've been paying tax, to what is the relationship with this really actually in awarding loan. Most of these MSME, you also look at the possibility of viability of their business to grow in order for those loans to be awarded. And because of lack of education and things like that, they might have difficulties to design a very engaging business plan that the bank might want to see in that regard. So, looking at this, so we tend to see the link between people not being able to secure a loan and continuous wallowing in abject poverty, okay? Because the MSMEs are very stagnated, so they remain there. They are not able to move, isn't it? To probably, if they have got a couple of, let's say, fundings or loans, they might be able to increase their size of the business, venture into that kind of investment, even take on people, employ people and put up a platform, but they are not able to get those loans in particular. So we found that 60% of MSMEs in Africa are in need of additional funding for their businesses, okay? We also know that if they are not able, there is a divide between what is being required by the MSMEs and what the traditional banking system can provide. Okay, that divide is there. Another point to note that I talked about this before, talking about the number of people in Africa that is living on less than $2.5 per day, and we know that Nigeria, Congo Democratic Republic or Democratic Republic of Congo are topping the list of those people that are wallowing in extreme poverty. Okay, I think Nigeria has 11%, while DRC has 10%. So the numbers also follow that other African countries are living in extreme poverty with high percentage, Tanzania, Mozambique, and Madagascar. Although South Africa and Kenya are better off when compared to these other African countries. So how can we come in? What is in for us? Why should we bother? You know, as fintech firms, what is in for us? Yes, there are a number of ways that we should concern and connect with eradication of poverty. You know, in terms of looking at what we can do globally, in terms of being able to have a platform where people can have access to information could be one way, okay? The regulatory challenges is also quite daunting. We know that in most countries, government tend to regulate, or over-regulation is a key problem that we are facing. So it's not just the fintech startup companies, we're also looking at whether governments, policymakers can look at how they can limit the regulation in terms of allowing fintech firms to create platforms where people will be able to take advantage of the opportunity to obtain information and also have access to borrowing, either from the firms. I know the issue of what will worry us is about the credit worthiness of these MSMEs, but there are other ways you can ensure their credit worthiness in terms of that. So financial literacy is also very important. We need to look at who are those that are going to use our products. Most times what we have found that, and you can quite agree with me, you don't take into account the educational background of those who are using the product. We are designing it for people who can read and write, people who have financial trainings and all the likes. So we must also look at how we can educate people on how to use this technology and make it very simple for them to do. Cybersecurity is also one to look at how we can ensure that people do not become a victim of cyber theft as a result of using our facilities. So we talked about fintech helping those small and medium enterprises to be able to obtain loans and also use some of the information that they've gathered about them to, in order to create their identity. So they can leverage their digital capacity and ensure that they can make people to take advantage of such borrowing and also facilitate their easy ways to make this payment. That is it. Except we have time, then I'm able to take questions. Other than that, thank you very much for listening.